start the day the banking system stops working. If everyone tried to withdraw their money today, the banking system wouldn't survive the day, not because of theft, but because the money isn't all there. And I know that sounds crazy, because banks look powerful, they look stable, they have marble floors, security guards, and big logos that scream "Trust us." But the truth is, most banks are not vaults, they're machines. And that machine only works when people stay calm. The moment everybody wants their cash at the same time, the whole system starts shaking. So today I'm going to walk you through exactly what would happen, step by step, if millions of people tried to withdraw their money at once. And stay with me, because the end of this story reveals the one thing that keeps the entire banking world alive. And it's not money, it's belief. Let's start with the first thing that would happen. Banks would run out of physical cash fast. A bank branch doesn't keep every customer's money sitting in the back room. It keeps a small amount for normal daily withdrawals. That's it, because most people don't pull out everything. They take out a little, then go on with life. But if suddenly everyone wanted their cash today, the ATMs would empty, the bank tellers would run out, and the banks would immediately start limiting withdrawals. You'd see signs like "maximum withdrawal per day," and that's when panic would spread. Because the moment people feel restricted, they start to think, what are they hiding? Now, the second thing would happen. Lines would form everywhere. And here's the scary part. The lines wouldn't just be in front of banks. They'd be online too. Because modern bank runs are faster than ever. You don't need to stand outside anymore. You can move money with your phone. You can transfer it instantly. So if fear starts trending, millions of people could attempt withdrawals in the same hour, and that speed would overwhelm systems. Apps would crash. Websites would freeze. Customer support would disappear. And while the bank is trying to stay calm, the public would start spiraling. Pattern interrupt. Imagine trying to buy concert tickets and the site crashes. Now imagine that, but it's your rent money. Now the third thing would happen. Banks would start selling assets fast. Because if a bank doesn't have enough cash, it has to get cash from somewhere. So it starts liquidating. That means selling bonds, selling investments, and pulling back loans. But selling fast usually means selling at a bad price. And when banks take losses, their balance sheets get weaker. That makes people even more nervous, which leads to more withdrawals. And now you've got a feedback loop. Panic creates withdrawals. Withdrawals create losses. Losses create more panic. Now, the fourth thing would happen. The government would step in, because if banks start failing, the whole economy can freeze. People can't get paid. Businesses can't make payroll. Credit stops moving. And when credit stops moving, the economy slows down hard. So leaders would likely announce emergency actions. Maybe they'd add support. Maybe they'd inject money into banks. Maybe they'd guarantee deposits more loudly. But here's the truth. Those announcements are often designed for one main goal: to stop you from withdrawing. Because in a crisis, The system doesn't need your money, it needs your trust. Now, let's keep it simple. Banks can handle everyone withdrawing at once because banks don't store money like a safe. Most banks use fractional reserve banking. That just means the bank keeps only a fraction of deposits as cash and uses the rest for loans and investments. So when you deposit money, it doesn't sit in a pile with your name on it. It becomes part of the bank's working system. The bank lends it out. It earns interest. It keeps the economy moving. Here's a simple example. Imagine 1,000 people deposit $1,000 each. That's $1 million. The bank keeps a small part ready and lends out the rest. The people who borrow that money spend it, and it ends up deposited somewhere else and then loaned again. It's like the same money supports many promises, and as long as people trust those promises, everything looks fine. But if everyone demands cash today, the promises get tested, and that's when the truth shows up. Now, here's the scary part. Most people don't realize the difference between money and access to money. You can have $10,000 showing in your account, but if the system is frozen, it's like having food behind a locked door. The money is there on paper, but not usable in real life, and during a real panic. Speed matters more than numbers. The person who can pay quickly stays calm. The person who can't starts to panic. Now, the fifth thing that would happen: businesses would get hit next. If people can't access their money freely, spending drops fast. Restaurants get fewer customers. Stores slow down. Small businesses get nervous. And companies start cutting costs. That means layoffs. That means hiring freezes. That means lower pay. So a bank run doesn't just hurt banks. It hits the entire job market. Now we go one level deeper, because bank panic also spreads into credit. When banks get scared, they tighten rules. They reject loan applications. They raise interest rates. And suddenly, borrowing becomes harder for everyone. That hurts people trying to buy a home. It hurts small businesses trying to survive. It hurts car buyers. And when credit dries up, the economy doesn't just slow, it can choke. Because modern life runs on credit the way a city runs on electricity. Now, the sixth thing that would happen: markets would shake hard. If banks are forced to sell assets, prices drop, investors panic, retirement accounts fall. And now people who never cared about banking become scared because their future savings are shrinking. And this is how a banking problem turns into an economy problem, fast. Now, here's the cliffhanger. Modern bank runs don't even need long lines. They can happen with phones. One viral rumor, one bank app glitch, one scary headline, and millions of people can hit transfer at the same time. That speed is deadly for stability, because even if the bank is fine, fear can break it. Now, let's talk about everyday people. The first group that suffers is people living paycheck to paycheck because they need access to money every week. The second group that suffers is small business owners, because they need steady cash flow. The third group that suffers is older people on fixed income, because delays hit them harder. And the fourth group that suffers is anyone who relies fully on digital payments, because if systems lag, buying basic needs becomes stressful. This is why cash still matters. Cash works when systems don't. Cash doesn't need approval. Cash doesn't crash. Cash doesn't care about server outages. Pattern interrupt. The craziest part is, we call it your money, but the moment you need it most, you learn how much control you really have. So what do smart people do? They don't panic. They prepare before panic. They keep emergency cash, not to be dramatic, but to stay flexible. They spread their money. Instead of keeping everything in one place, they reduce toxic debt, because debt makes you weak in chaos. They build valuable skills, because skills keep income flowing even when markets shake. And they avoid making fear-based decisions, because fear is expensive. Here's the real lesson. The banking system doesn't run on piles of cash. It runs on confidence. Confidence that people won't all withdraw at once. Confidence that the numbers on a screen will still work tomorrow. And when confidence breaks, the entire machine starts to fail. So don't wait until the day the banking system stops working. To understand how it works, learn now, prepare now, move smart now, because when everyone panics, the calm person always wins. If you want more money, truth, financial history, and real wealth lessons in simple language, subscribe to Cashfree World and hit like so YouTube pushes this to more people who need it, and comment below. Do you trust banks completely, or do you keep emergency cash just in case?